Welcome to Behind the Business, the podcast where we cut through the noise and get real about running a profitable business. I'm Pamela Hilton, CPA, with over 30 years in accounting, tax, payroll, and business advisory services. Each week, I will share stories from the field, answering real questions from business owners, and give you the straight talk you need to grow and protect your business. No fluff, no hype, just practical advice that works in the real world. So, let's get to it. Welcome back to Behind the Business. I'm Pamela Hilton, CPA and business advisor, and today we're diving into one of the most overlooked but critical areas of business ownership. It's your cash flow. I'm going to be talking about what cash flow is, why it matters, some common missteps I see business owners make when it comes to their cash flow, how to put in place some strategies to have better business habits when it comes to your cash flow, and we'll give you some tools to take home with so that you can look at your cash flow and see if how healthy you're doing. So why does cash flow matter? First, let's define cash flow. It is simply put as the movement of money in and out of your business. It's not necessarily your profitability, it's the movement. It's the whole system of the money coming in and how it goes out, the timing of it. The profitability is different than your cash flow. It's really just what's left over at the end of the month is your profitability, or the end of the year. The cash flow is the movement. So let's share a quick example to kind of drive this home. You're a construction company and you consistently show a profit on your tax returns, but you can still struggle with your cash flow if your clients are taking forever to pay, or you have a seasonality to your business, or that your invoices are payable upon receipt, but yet your clients aren't paying you for 30 days. So you can see how you can still have profit when it's all said and done at the end of the year, but the day-to-day cash flow is still really tough, and it's not as smooth and effective as it should be. So there's a difference there. So that's why cash flow matters. You have to be able to have a handle on the timing of all the money that's coming in and the timing of everything that's going out to ensure that you have enough left over at the end of the month to repeat the cycle again. And it's a little bit of a juggling act, but if you put some good habits in place, I'll show you how you can manage this. So common cash flow mistakes, let's go over these and then we can talk about it. It'll seem a little bit clearer on how you can fix these and what strategies you need to put in place. So not tracking your inflows and outflows regularly. And this is going back to a common theme I have throughout all of my podcasts is you really need solid accounting. You need solid accounting system. You need software, number one. And number two, you need somebody very competent and skilled at running that software and putting your numbers in there and running reports and making sure things are accurate and up to date. So the accounting system and having competent help is really the starting point to tracking things and using the software, the accounting software, to produce reports that you can use in your decision making. If you are using a DIY system or no system at all, you really have to get that done first before you can manage the whole cash flow issue. Overextending on expenses when revenue is high. This is especially big pitfall if you have a seasonal business like landscaping or snow removal. Those are real seasonal type businesses. And if you aren't managing things properly, the money coming in will quickly run out if you're not kind of matching when your revenue with your expenses. So if you have a period when you have high revenue and high expenses, and then your seasonality drops off and you have low income and low expenses, that's fine. But making sure that you're matching things and you're kind of planning for a rainy day can help you lead to a big mistake when you've run out of cash, but you still have obligations and expenses you need to pay. Going back to the first on our list, tracking things and making sure you know when your seasons are and what your future expenses are going to be is really critical. Mixing personal and business funds. This is often a big misstep that we see, and we've all done it. We've paid something personally out of your business account, and you generally do this one of two reasons. You're not paying yourself properly, and you're not moving that money from your business account to your personal account by paying yourself, or it's just easier sometimes. You have the business debit card and you know the money's already in there. So if you're paying yourself properly and you have this done regularly and routinely, that won't be an issue. So mixing the personal and business expenses is never a good idea, but it can also really cripple your cash flow if you're doing this on a regular basis. The next one is poor accounts receivable management. If you are a business where you invoice your clients and then they pay the invoice, you have to be regularly following up on that, making sure you're sending out the invoices in a timely manner, making sure clients are paying you, making sure they're paying you on time. It's really tough to collect on an invoice that you haven't followed up on, you haven't reminded people. So having a system and a really nice accounting system that's sending out reminders, that's following up on people who haven't paid is can be really important with your cash flow, because you kind of let that drop off. It's just really hard to get back with customers who haven't paid you. Ignoring or not understanding future expense obligations. We see this again a lot with clients as well who don't understand what compliance they have with their business. Are they subject to sales tax? Do they have meals tax? Do they have other taxes in their industry, and not understanding how much of those taxes are going to be owed in future months? Payroll taxes, not understanding how payroll taxes are paid and the deadlines and due dates for all of these things. So as a business owner, having a firm grasp on what your future obligations are, taxes, compliance, utilities, things like that, paying vendors, having a grasp on your future bills, it will have a huge impact on your cash flow. So knowing what those are in advance gives you a step up on all of those things. Using credit cards as a band-aid for poor planning. Unfortunately, we see this a lot with clients who have poor cash flow management, and they use the credit card as kind of an in-between. When their cash flow is really poor, they have to use the credit card to meet some obligations. But if we can put some strategies in place for you to manage those numbers, then the less reliant on business debt and credit cards you are, the better and healthier your business is going to be. So here's a scenario that we have with one of our clients, and it's becoming more popular, partially because I don't think people are aware of what this actually is. But we have clients who sometimes use a short-term loan situations that you'll see online. You can sell future collections of your receivables to customers to these businesses, and they will give you an upfront loan. And that's really just what they do. Clients don't understand is there's usually very high fees associated with these short-term loans. There's very high interest rate that's kind of hidden in the fees that they don't realize. And it's a real short-term solution, but it's costing you way more money than if you took the time to put some strategies and systems in place for a healthier cash flow. In the long run, this will really muck up your cash flow, because now you've got these loan payments that you have to make that are coming out on either a daily, a weekly, or a monthly basis that you wouldn't have otherwise had you not taken out the loan and had a healthy cash flow. So that's something we've seen with a few clients recently. I get it. The economy is crummy, but let's fix the problem instead of putting that kind of a Band-Aid on it. So some practical cash flow management strategies that you can put in place for your business. Forecasting. Running a report in your accounting system, and again, you have to have a really solid accounting system for this to be accurate, but running, I would say, probably an income statement or profit and loss statement. I like to see a monthly profit and loss statement and then a comparative statement. So you will run a profit and loss for January, February, March, April, May, and for this year, and then compare it to the profit and loss from the previous year. So you'll see January of this year versus January of last year, February of this year versus February of last year. And then you can see, number one, how your business is growing or not growing. And number two, what those trends in your cash inflows and cash outflows are. That's really the first step, to look at these numbers, use the accounting system, what it's meant to be for as a management tool, and looking for those trends in your inflows and outflows, and it'll give you a better idea about next steps to take in your own business. Two, setting clear payment terms. Be upfront with your customers, with your clients, on what you expect for your billing, how you're going to invoice them, how often you're going to invoice them, when you expect payment, what happens when they don't pay, are there finance charges, do services stop, do you know what I mean? What is the whole system that you have, your policy for invoicing clients, getting paid, and delivering your services and products? Be very upfront about that and unapologetic about, this is how we do it, this is how we get paid, this is what we expect from you, and this is what you can expect from us. Building a cash reserve. So this is important in your personal life and your business, is to have a set aside, a cash reserve, instead of relying on short-term loans or credit cards. Making sure you have some money set aside, 1 to 3 months of business expenses, is always a great idea. Again, using your accounting tools. We use Xero.com for our accounting system for the firm and for clients. We put everybody on there who doesn't already have an accounting system. If you want to learn more about Xero.com and the packages we offer, because we pay for the Xero subscription for our clients, book a discovery call and I can go over all of that with you. But using these tools that are in the accounting system, most of these accounting software, you can run all kinds of financial reports, comparative, not comparative, cash flow, general ledger. They're all standard reports that are already in that accounting software. Budgeting, forecasting, all of it. Use them, learn how to use them, watch some YouTube videos on them, and learn how to use those, the accounting system that you have already are paying for. Learn how to use those things. Book a call with your CPA or your financial person and ask them how to use them if you don't, because I'm sure they'd be happy to show you how to use those reports and how you can run your business and make decisions from those reports. Again, separating your business and personal expenses. Trust me, if you start off with this very simple business habit, keeping things separate, learning how to pay yourself properly so that you're not dipping into the business account to pay personal expenses, is just a superior way to run things if you're a business owner. And schedule time monthly to review those statements. It's great now that you have the accounting system, you've got somebody competent working on it for you, you know how to run the reports. Now you actually have to do that on a routine basis and look at them. Once this becomes part of your routine, you'll be able to make better decisions, make more timely decisions, see things before they get to be an issue, and you'll be able to really just, this is what's going to help you grow your business. This is what's going to help you scale things by doing these small things, but consistently, right? So if, I'm sure all of us do this, you have your bank app on your phone, you're checking your bank balance regularly anyway, right? So let's do some other things regularly, like looking at the profit and loss statement, looking at your balance sheet, looking at your transactions for the month, monitoring your cash flow, those sorts of things. So here are some long-term cash flow strategies. If you have a healthy cash flow, you'll be able to build a better team. It will free up your time to focus on other aspects of your business. And it will give you the peace of mind as an owner that you are in proactive state instead of reactive state. So those are kind of the benefits of having long-term healthy cash flow. you're going to see that once you put some of these simple things in place, and some of these things you'll only have to put 1 or 2 of these in place in order to get a real good handle on your cash flow. You'll have more time to build your business. You'll have better people on your team who are helping you grow your business as well. You'll have more time to do the marketing and advertising and getting better customers and clients. You may discover that your roster of clients and customers aren't really paying you and they aren't the greatest clients and customers anyway. So it'll give you lots of all these insights for your long-term health of your business. What I would encourage all of you out there to do is take a look at your systems, take a look at your accounting, take a look at your numbers. And if you struggle with cash flow, number one, you can always book a discovery call with me and we can talk about your business and what's going on with your business. I also have a free cash flow tool that I'll have the link in the description of the video. So that's it for Behind the Business for this episode. Join me in other episodes where we uncover more business tips and tricks and what goes on behind every business. Thanks for listening to Behind the Business. If you found this episode helpful, please share it with another business owner who could use some real world advice. For free resources, tools, and to submit your own business questions, head on over to my website, PamelaHiltonCPA.com. Until next time, keep building smart and keep looking behind the business.